Hey everyone, welcome back to the channel. If you're a trader or investor looking for insights that actually matter, you're in the right place. Today, we're breaking down exactly what happened in the US stock market on November 15, 2024, and I'll be giving you my take on what to watch for heading into November 18th. Make sure you stick around. I've got key technical levels and economic data points you don't want to miss. Alright, let's start with the big three. S&P 500, we saw a modest pullback of 0.4% today, closing at 4,535. Tech and healthcare weighed heavily on the index, but energy names gave us a bit of a cushion. The question heading into Monday is whether buyers will step back in near the 50-day moving average. Dow Jones Industrial Average, the Dow was the outperformer, down just 0.1%. Boeing and Goldman Sachs held up strong, but consumer staples like Procter & Gamble lagged. If we break below 35,000 early next week, it could signal more downside for the broader market. Nasdaq Composite, the Nasdaq was hit the hardest, falling 1.2%. Growth stocks have been struggling with rising yields, more on that in a minute. Keep an eye on the 14,200 level, it's been a key support zone recently. Now let's talk about sectors. Energy was the star of the day, gaining nearly 2% as crude oil prices climbed above $83 a barrel. ExxonMobil and Chevron led the charge, with both stocks up over 3%. On the flip side, technology took a beating. Apple dropped 2.5% after reports of weaker-than-expected iPhone sales in Europe. Meanwhile, Nvidia slipped 3.1%, despite strong demand in AI-related chips. Investors might be taking profits here after its massive run-up earlier this year. One bright spot. Financials. Banks benefited from higher bond yields, with JP Morgan and Bank of America both gaining over 1%. Today's market moves were heavily influenced by the latest economic data. Retail sales came in stronger than expected, rising 0.8% in October. While that's great news for the economy, it has traders worried the Fed might not be done raising rates. Speaking of rates, the 10-year Treasury yield climbed to 4.75%. That's the highest we've seen in weeks, and it's putting pressure on growth stocks. But remember, higher yields also make dividend-paying stocks more attractive, so keep an eye on utilities and REITs heading into next week. Here's what I'm focusing on for November 18th. S&P 500, 4,535. If we see a close below 4,500, that could trigger a wave of selling into Thanksgiving week. Nasdaq, 14,200. Watch for a bounce or breakdown here. A move lower could signal a broader tech sell-off. Crude oil, $83. Energy stocks have been following oil prices closely. Any move above $85 could ignite another rally in the sector. Earnings season isn't over yet, folks. On Monday, we'll hear from Home Depot before the market opens. This will be a big one for gauging the health of the housing market and consumer spending. After the close, Zoom Video Communications reports. With work-from-home stocks cooling off, it'll be interesting to see how they're navigating the slowdown. Here's the big question, what can we expect next week? Volatility, the VIX ticked higher today, closing near 17. If it spikes above 20, brace yourself for some choppy sessions. Sector rotation, I think we'll see more money flowing into defensive sectors like healthcare and consumer staples. At the same time, energy could remain strong if oil prices keep climbing. Economic reports. Monday's data slate is light, but keep an eye on the NAB Housing Market Index. It could give us clues about mortgage demand and homebuilder sentiment. Alright, folks, that's a wrap for today's recap and forecast. If you found this video helpful, make sure to hit the like button and subscribe for more actionable insights. Drop a comment below with your stock picks for next week. I'd love to hear what you're watching. Until next time, stay sharp, stay focused, and remember, the market rewards those who do their homework. Have a great weekend, and I'll see you Monday morning. Like, subscribe, and share this video to help more traders crush the market.